Tucked in the Inflation Reduction Act is a huge fix for those of you buying your health insurance through Healthcare.gov or those of you that plan to. I'll explain that more coming up. My name is Mike Bernard. I'm the host of The Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, verdict is still out. I don't know if the Inflation Reduction Act will actually do anything to help with inflation. I don't know, but I've told you before, if you're a regular fan of the Wise Money Show and these videos, that I actually don't know how Congress comes up with naming these bills and these laws. But the Inflation Reduction Act, but here, do me a favor. You know, it's abbreviated IRA. Don't call it IRA. That's also one of my issues with the individual retirement account. It's an IRA, not an IRA, but sorry for those of you that call it an IRA. Okay, so, but the Inflation Reduction Act, I've looked at some of the studies. There's not a lot of projected economic growth built into these things, and there's not a lot of optimism that it's actually going to do much with directly to help inflation. It's got other agendas, of course, but here's what it did do. Okay, I'm not talking about the IRS agents. It actually fixed an enormous problem, a subsidy cliff that was coming for those of you that buy your health insurance through Healthcare.gov or plan to in the upcoming year. Back in the Affordable Care Act, if your income was going to be 400% or lower than the federal poverty limit, then you were going to be eligible to receive a discount, pay less for your health insurance that you would purchase through Healthcare.gov. Okay, so this was there were some calculations built in to the system to say, well, listen, if your income is below that 400% of the federal poverty level, below that level, then you should realistically only be able to afford to pay for health insurance up to a certain percent of your total income. Okay, but once your income is above 400% of the federal poverty limit, then you have to pay the full freight. There's no discount. These discounts come to you via a premium tax credit. So it's actually a tax credit that you get in advance, and you pay cheaper, you pay less than the normal premium each month for your health insurance. And then when you file your taxes, if you've never done this before, if you file your taxes and you actually make more than what you said you were going to make, you've got to pay some of those premium tax credits back. In some cases, all of them if you made a lot more. This can $1 of your income being higher than that 400% of the federal poverty level could mean that you owe thousands of dollars of these premium tax credits back when you file your return. So it's a significant tax planning issue. Well, following COVID and some of the stimulus measures put in place, the American Rescue Plan Act, again, that's where I got on the soapbox of who comes up with these things. ARPA, like what's a Plan Act? I don't understand how they name these bills and these laws. But within that, they removed that 400% of the federal poverty limit cap. They removed that, got rid of it, and said, regardless, if you buy your health insurance through Healthcare.gov, then based on different income bands, and you can see them here on the screen, this is how much you could afford to pay for your health insurance. And if the actual premium for the health plan that you purchase through Healthcare.gov is more than that, then you get a discount, you get premium tax credits down such that you only pay what's deemed affordable in your situation. So here's the deal. At the end of this year, if Congress didn't act, the provisions that were put in place during the American Rescue Plan Act were set to expire. And millions of people would then be impacted and have to go back to the original subsidy laws that were put in place in the American the Affordable Care Act, excuse me. And so while, I'm not going to say that, well, the Affordable Care Act was the right compensation system, subsidy system, and the American Rescue Plan Act was wrong, or vice versa. I'm not going to say that. It was just going to impact millions of people and significantly change what people could pay for their health insurance. Well, if you are getting your health insurance through Healthcare.gov or plan to in the upcoming year, or really the next few, good news is within the Inflation Reduction Act of 2022, they extended the American Rescue Plan Act subsidy levels, extended it through 2025. 65. So that's 3 more years. So if you're currently on Healthcare.gov insurance or plan to be because you're going to retire soon or retire before Medicare, something like that, this means lots more opportunity for you to do proactive tax planning with your certified financial planner and pay a even more competitive or even more reduced amount for your health insurance than you otherwise would under the Affordable Care Act subsidy limits. Couple things that it hinges on. Number one, it's going to hinge on what your modified adjusted gross income number is, okay? So what you're going to want to work with your CFP and try and get that adjusted gross income number in as low as possible. And therefore, because the modified adjusted gross income number is derived off of that AGI, what are the things that you could do proactively to reduce your adjusted gross income? Well, if you're still working, contributing to a 401k and doing so in pre-tax. Normally, if you're in a lower income or low tax bracket situation, you might say, well, advantage Roth IRA. I understand that, but if you're getting your health insurance through Healthcare.gov, it may make more sense to have those dollars contributed pre-tax so that you have your adjusted gross income be as low as possible to get more of these tax credits. Secondarily, if you're getting this health insurance through Healthcare.gov because you're semi-retired or in retirement, this may influence where your proactive tax planning strategy may be. Where do you draw income from and how much? How much capital gain do you harvest? How much withdrawals do you take from pre-tax IRAs versus Roth versus just, living off of dollars or supplementing dollars from your bank account? So those are great tax planning considerations. And then the final one is, should you do a Roth conversion or not? For a lot of clients that we serve at Korhorn Financial Group that are in the early stages of retirement, therefore they've gotten their health insurance through Healthcare.gov, especially with the market going down, we're really planning, okay, should we do a Roth conversion? If so, how much? Well, if you're getting your health insurance through Healthcare.gov, the more Roth conversion you do, the less subsidy that you get, meaning the more you're going to have to pay for your health insurance. You've got to weigh that through all 6 areas of your financial life, working with your CFP to make the best decision for you. So that's one, you've got to pay attention to these strategies, but 2, you've got to be proactive, and that's more general. If you're getting your health insurance through Healthcare.gov or plan to, because of these unique subsidies that we now know will be around for at least another 3 years, work with your certified financial planner. Be proactive with your overall health insurance, your tax situation, so that you can then plan appropriately for your health insurance cost and make sure that your income, do as much as you can to get your income to fall within certain bands. This is one of the many reasons why I just absolutely love tax planning, proactive tax planning, and why we believe the best approach to addressing your overall financial plan is to work with a certified financial planner who understands all 6 areas of your financial life and can help you make decisions that bring synergy to them. Hopefully your CFP then is working with your CPA, but also with your health insurance expert. Ideally, they're on the same team, just like we have it structured here at Korhorn Financial Group. So work with your certified financial planner on that. If you don't have a CFP on your team that's collaborating with those other 2 professionals, coming up with a strategy and then helping with execution, you can contact us on our team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.